The world is watching as the US-China trade war enters a dangerous new phase. After years of tariffs and tech battles, China has made a game-changing move, halting all new deliveries of Boeing aircraft. This isn't just another trade dispute, it's a direct challenge to American industrial power. Boeing, a cornerstone of the US economy and a major exporter, is now at the center of the storm. The decision strikes at the heart of American manufacturing and innovation. What began as a dispute over trade imbalances has become a full-blown rivalry for global influence. The conflict has expanded from steel and soybeans to advanced technology like 5G and semiconductors. Each side accuses the other of unfair practices, both claiming to defend national interests. The halt of Boeing deliveries marks a significant escalation, putting strategic industries on the front lines. China's move is a calculated geopolitical strike, designed to inflict maximum economic and political pain. The timing is critical, as the global economy faces uncertainty. The White House is under immense pressure to respond to this direct hit on a major American company. The stakes have never been higher. This is no longer a distant economic debate, it's a crisis affecting workers, companies, and markets worldwide. The world holds its breath, waiting for the next move in this high-stakes game. The escalation did not happen overnight, it's the result of years of growing tension. The US and China have moved from economic partners to fierce rivals. The Boeing decision signals that no industry is safe from becoming a pawn in this conflict. The message from Beijing is clear. China has powerful economic weapons beyond tariffs. This is a warning shot to Washington and a signal to the world. The global balance of power is shifting. The economic fallout will ripple far beyond the US and China. Markets are bracing for impact. The next chapter in the trade war has begun. The world is watching, and the consequences will be felt everywhere. The question now, who will blink first? The trade war has a new front, and the stakes have never been higher. For Boeing, China's decision is a devastating blow. China is the world's fastest-growing aviation market and a key customer for Boeing. Decades of investment and planning are now at risk as the Chinese market slams shut. Boeing's stock price has plunged, and assembly lines in Washington are grinding to a halt. Planes built for Chinese airlines now sit idle, costing millions in storage and maintenance. The company scrambles to find new buyers in a market planned years in advance. The crisis hands a golden opportunity to Airbus, Boeing's European rival. Beijing's move could permanently shift the balance of power in global aviation. The shockwaves hit Boeing's vast supply chain. Thousands of US suppliers face lost orders and layoffs. This isn't just Boeing's problem, it threatens the financial stability of American manufacturing. Tens of thousands of skilled jobs are now at risk. The crisis at Boeing is a crisis for the American industrial base. The company's future and that of its workers hangs in the balance. The world's eyes are on Boeing as it faces its greatest test yet. The stakes for American industry have never been higher. The fallout will be felt for years to come. Boeing's turbulence is just beginning. China's halt on Boeing deliveries is a cold, calculated move. It's powerful retaliation for US tariffs and tech restrictions, targeting a company with immense political influence. China is also promoting its own aerospace industry. COMAC's C-919 jet is poised to benefit as Chinese airlines look inward. This is classic industrial policy, using state power to nurture a strategic sector and reduce reliance on foreign technology. The move sends a global message. Partnership with China brings rewards, opposition brings consequences. By targeting Boeing, Beijing warns other nations to consider their alliances carefully. It's a demonstration of China's willingness to use its market as a political tool. National pride is at play. China frames this as standing up to US pressure. The government taps into domestic nationalism, reinforcing its narrative of a strong, assertive China. The world sees a new, bolder China willing to defend its interests. The Boeing decision is about more than planes. It's about power, pride, and the future of global influence. The stakes are global, and the message is unmistakable. The impact of China's move goes far beyond Boeing. American businesses in China now face heightened political risk. The promise of China's vast market is suddenly shadowed by uncertainty. The Boeing case proves no company is too big to be targeted. Trust between the US and China is shattered, making future cooperation on global issues harder. The global supply chain is under severe strain, accelerating the trend of companies moving operations out of China. This decoupling will be costly and disruptive, leading to higher prices for consumers worldwide. Boeing's troubles worsen the U.S. trade deficit and threaten thousands of American jobs. Investor confidence is shaken, and economic growth is at risk. What started as a targeted trade action now threatens broad economic damage across the U.S. The ripple effects will be felt in boardrooms and households around the world. The stakes for global business have never been clearer. The U.S.-China clash sends shockwaves through the global economy. Markets crave stability, but the Boeing halt signals that geopolitics can abruptly disrupt commerce. Stock markets worldwide have tumbled, investors fleeing to safe havens. Countries with ties to both the U.S. and China now face tough choices. No one wants to pick sides, but the pressure is mounting. The risque world split into competing economic blocs, reversing decades of globalization. The rules-based trading system is under threat as both powers bypass institutions like the WTO. If the world's largest economies ignore the rules, others may follow, fueling a wave of protectionism. Developing nations are especially vulnerable, as a global slowdown would hit their exports and growth. They are caught in the crossfire, facing setbacks to their development goals. The fight between Washington and Beijing is a global problem, not just theirs. The most vulnerable stand to lose the most. The world economy is at a crossroads, the stakes are global and the risks are real. Economic analysts and foreign policy experts are sounding the alarm. There's broad consensus. Trade wars are easy to start but hard to win. Tariffs and sanctions hurt both sides. American consumers pay more, workers lose jobs, and companies lose market share. Business leaders plead for stability, warning that political decisions can destroy years of investment overnight. Foreign policy veterans warn that turning a competitor into an adversary is a historic mistake. They stress the need for U.S.-China cooperation on global challenges. Some hawks argue confrontation is necessary to address China's unfair practices, even if it means short-term pain. The debate is fierce, but the risks of escalation are clear. The world needs leadership, not brinkmanship. The cost of miscalculation could be catastrophic. The time for wise decisions is now. Resolving this crisis demands extraordinary diplomacy. Both Washington and Beijing must appear strong at home, yet avoid a full-blown trade war. The situation is delicate. Any misstep could trigger rapid escalation. The first step: reopen channels of communication. Quiet, back-channel talks are essential to find common ground and avoid disaster. A truce could pause new hostilities. Perhaps the U.S. delays tariffs, China resumes Boeing deliveries. This would buy time for real negotiations. Long-term solutions require tough concessions on both sides. The U.S. must recognize China's aspirations. China must address trade concerns. It won't be easy or quick, but it's the only way to rebuild trust. The alternative is continued conflict, harming everyone. The world needs a stable, predictable economic relationship between its two giants. The path forward is narrow but essential. The stakes could not be higher. Behind the headlines are real people whose lives are upended. Thousands of Boeing workers and suppliers in the U.S. now face layoffs and uncertainty. American farmers, already hit by Chinese tariffs, continue to struggle as export markets dry up. Chinese workers too feel the pain as global supply chains falter and manufacturing slows. Ordinary people with no say in these disputes pay the highest price. Rising tensions fuel nationalism and suspicion, eroding decades of cultural and scientific exchange. The social cost is deep, dividing societies and making future cooperation harder. The human toll of this conflict is profound and lasting. Trade wars are never just about numbers. The cost is measured in lives disrupted and futures put at risk. The world stands at a crossroads. Escalating conflict between the U.S. and China threatens fractured supply chains, slower growth, and instability. China's Boeing decision is a symbol of this dangerous path. The alternative is diplomacy, negotiation, and renewed commitment to international cooperation. Both sides must address real grievances and find a new equilibrium. The choice made now will echo for decades. Will we slide into a new era of great power conflict, or pull back from the brink? The stakes go far beyond Boeing or trade balances. This is about the future of the global economy, and the hope for a peaceful, prosperous world. The time for bold diplomacy is now. The world is watching and waiting.